Imagine a world where a single decision in the US could ripple across the globe, impacting your daily life in India. Intrigued? Keep watching to find out how. In September 2024, the US Federal Reserve cut its interest rates by 25 basis points, a move that has caught the attention of global markets. After a series of rate hikes to control inflation, the Fed is now focusing on stimulating economic growth by making borrowing cheaper. But how does a change in US interest rates affect the Indian economy? The impact may not be immediate, but it will influence key aspects like foreign investment, currency stability, inflation, and trade. The US interest rate cut is likely to make American bonds and other fixed-income assets less attractive to global investors, including those from India. As returns on US investments decrease, foreign institutional investors might redirect their capital towards emerging markets like India, which typically offer higher returns. This influx of foreign investments can lead to increased demand in Indian stock markets, pushing equity prices higher and benefiting Indian businesses. The interest rate differential between the US and India plays a significant role in determining exchange rates. A reduction in US interest rates could lead to some weakening of the US dollar, as lower rates tend to decrease demand for dollar-denominated assets. If the dollar weakens, the Indian rupee could appreciate against it, making imports cheaper for India, particularly crude oil. Cheaper imports could help reduce inflationary pressures in India, but a stronger rupee could make Indian exports less competitive in global markets. The US interest rate cut could indirectly influence inflation in India by encouraging global economic activity, leading to a potential rise in demand for commodities like oil and metals. Historically, any fluctuations in oil prices have had a direct impact on inflation in India, as oil is essential for transportation, manufacturing, and other industries. If global oil prices rise due to increased demand driven by economic activity in the US, inflation could rise in India. To combat inflation, the Reserve Bank of India may consider adjusting its monetary policy, potentially delaying interest rate cuts or even raising rates. Indian companies that have business ties with the US, particularly in sectors like IT services, pharmaceuticals, and manufacturing, will experience mixed impacts from the US rate cut. For companies in export-oriented industries, the interest rate cut in the US may lead to more demand for Indian goods and services, particularly if the US economy strengthens. However, a stronger rupee could offset this by making Indian exports more expensive. For Indian companies with international exposure, a US rate cut could mean cheaper access to financing in global markets, encouraging expansion and capital investments. The US interest rate cut may have broader implications for global trade, including India's position in the global supply chain. As the US seeks to stimulate its own economy, India must carefully balance its own monetary and fiscal policies to optimize the benefits and mitigate the risks posed by changes in global interest rates. Stay tuned for more insights on how global events shape our local economy.